I am now investing in contemporary art. And why? Because the dozens of billionaires and multimillionaires that I've had on this show, they do it too. I'm just following the leader. Since the mid-90s, contemporary art prices and appreciation have actually outpaced the total return of the S&P 500 by 164%. I want a piece of that action. So the way I do it is through a platform called Masterworks. They allow me to buy fractional ownership in those classic names, the multi-million dollar paintings by artists like Monet, Picasso, Andy Warhol, etc. If that painting is sold after I buy my ownership as a part owner, I get paid out on that sale. Or if I just want to liquidate my position prior to, I can do so on the Masterworks secondary market. Personally, I don't intend on that. I dollar cost average in. I intend to park cash there for the long term. If you're interested, check out masterworks.io and follow me down this path.
Hi, I'm Montana, New York, and I'm your host here at Cambridge House. I'm joined today by the one and only Chris Vermeulen of the Technical Traders. Chris, thank you for being here.
Hey, thanks for having me, Montana.
Anytime. Chris, talk to me about the Technical Traders and all the great work you do over there.
Sure, yeah. Technical Traders, we follow the markets pretty much bar by bar. We follow the charts using technical analysis. And, the nice thing about technical analysis is we follow price. We don't really have to predict or guess. We just follow the trends. And when they change, we change our positions. And it allows us to pretty much navigate the markets fairly safely. And it doesn't matter where we go. We could be in all kinds of different hot sectors or commodities at any given time. And I've been doing technical analysis for 25 years. And I've just found my sweet spot. And I love to trade it. I love to share my trades. And I kind of teach it at thetechnicaltraders.com.
Great. Thank you. And all that being mentioned, from a technical standpoint, what's catching your eye on the market right now?
What is catching my eye? Yeah, there's a lot going on. I mean, I think we're in the late stages of a bear market, a bull market topping out here for equities. I think we're very close to seeing what could be a multi-month or maybe even a multi-year bear market. I mean, everything's been so good since, when it comes to the stock market wise, everything has been very good since COVID. We got all the funding just piling into the stock market. Stock market's had crazy returns and real estate's gone through the roof. Pretty much everything people bought has gone up in value. And when things are really good and everyone's just clicking away and everybody's making lots of money, you got to start to, be aware that, eventually good times come to an end. You can't have good times without bad times. So when you look at the technicals from a big standpoint of the stock market, there's a lot of things starting to break down when it comes to the equities. And we're starting to see the large caps really roll over and sell off with big volume. We're seeing precious metals and commodities come to life. The US dollar is doing well. These are all things that start to come together in the late stages of a bull market. And I do have let me see if I've got a table here. I don't actually have it here, but when we look at the cycles of what sectors do really well during the late stages of a bull market, it usually comes down to energy, comes down to precious metals. We start to see utilities do really well. And then eventually we see healthcare start to do well. And all those things have been coming to life with huge gains. And when you look at the stock market from that perspective of what all the intermarket analysis is telling us, all these other sectors and commodities, it's telling us that we've had the big run in technology. We've had the big run in homes, pretty much everybody piling into the growth stocks. Now we are into the late stage commodity play, and it's kind of the final straw before the bottom falls out of the stock market. It hasn't done so yet, but it's very close. And that's what people need to be aware of. This market is at a tipping point where, believe it or not, the stock market could rally like 35% from where we are with a last capitulation, euphoric rally, or it could break down and actually fall about 30 or 40%. So we're right on the cusp trying to figure out from a technical standpoint which way this market's going to go. Long term, we're bearish looking in terms of investment capital. Short term, we're actually bullish on the market here still. So as you can see, there's mixed angles depending on the time frame trader that you are.
Great. Thank you, Chris. And then if you had to tell my listeners any home, like a home for their cash right now, where's a safe place for them to be storing their cash?
Cash is a great position. It really is. We're pretty heavy in cash when it comes to investment side of things. And bonds aren't acting like the safe haven. I mean, bonds have been in a bull market for 40 years. Interest rates have been coming down for 40 years. But now I think interest rates have more or less bottomed. When rates go up, bonds go down. So, when you look at the bond market, so many people are so used to just calling their advisor and saying, listen, I'm nervous about stocks, move me more into bonds. That's not really, I don't think, going to work anymore. Bonds are actually down the same amount as the SP 500 this year, down like, 8 plus 10%, which is not a good sign. Most people think bonds are defensive, but they're actually falling like the stock market. And I think it's really just getting started. So, cash is a really good position, but there actually might be a really good play in terms of inverse ETFs. So we can actually benefit from falling bond prices with inverse ETFs that'll rise as bonds fall. And so that seems to be kind of counterintuitive to what most people think, but we actually want to, I think, short bonds when we go into this bear market. I actually think they're going to continue to erode and fall, and it'll be a very interesting play going forward from there.
Thank you, Chris. And any other further forecasts you'd like to let my audience in on?
Yeah, I mean, when we look at the stock market, we've seen energy have a huge move up, and a lot of that has to do with war. As soon as we were told in February, war has started, we saw crude oil take off. We saw precious metals start to take off, and those are two commodities that are like, you say war, they go up. And we got that euphoric kind of everyone crowded into those two commodities, and they actually started to flood into all commodities across the board. I think the commodity market still has quite a bit of room to run. I think oil, energy's already had a very big move. I think a lot of opportunity now is actually going to be in precious metals. Typically, precious metals are one of the last sectors, especially mining stocks, to do very well just before the stock market as a whole starts a bear market. So I think the precious metals, they're just turning a corner. Oil and energy's already had its run. It could still go higher, but I think precious metals are like the fresh kind of commodity play to take advantage of. I like gold. I like silver in the miners. Copper miners are doing well. Base miners. I mean, any kind of miner is doing very well. And I think that has to do a lot with, you look at Ukraine, they're like the fourth largest resource producer in the world. And they're under attack. Obviously, farming, everything is going to be coming to a grinding halt. So now we're going to have this huge shortage. So the commodity complex as a whole, like DBC is an ETF that is kind of the commodity index ETF. It's a great way to of I think rising commodity prices as a whole going forward. You look at the UK, where there's Boris Johnson was talking with other leaders recently about nuclear energy and the wind industry as well, because obviously they could have issues with oil and natural gas from Russia. So I think a unique play there is actually the FAN ETF. FAN is the symbol. And that is for, windmill companies. And so that could be something that really comes to life. The FAN stock chart looks really bullish. It looks like it's got potential to have another push here, about 7.5% to the upside over the next week or two. So, and I think it might just be starting a pretty big run. And we've seen the solar sector do well in the past, but this time maybe the wind sector might replace, the solar for a bit, because if the UK is going to start implementing wind, that is going to be a pretty big mover, I think, for that sector, and that'll really fuel those companies. So I think there's some good opportunity in the commodity space and the clean energy space.
And so we had FAN in there, FAN. Is there any other specific companies that you're looking at right now or that are catching your eye?
I don't look at really individual companies. I like to look at sectors as a whole and use ETFs to trade them. I like to trade kind of tides. You look for where money's flowing, one pocket in the market, and I like to try and catch that wave more or less. So I don't get into the individual companies, but when it comes to, I think the commodity space, I think wind, solar, and precious metal miners. I think all those could do very well here going forward, just because of war, energy prices going up. It makes clean energy look affordable, and anyone producing raw materials is going to do well because they can charge you an arm and a leg for it, and that's the miners. So I think those are some pockets that could do very well going forward.
Thank you. And if we wanted to hear more from the technical traders or more from you, Chris, where would we find you?
Sure. Yeah. They can visit me at thetechnicaltraders.com. And over there, I share I do a morning video before the opening bell, kind of walk through the charts, what's going on with all the different asset classes and commodities, talk about any positions we have open. And whenever I take trades, I share them with all the subscribers. We all trade together. So it's kind of like a learning and kind of earning environment. We get in there, we've got a comment section. Guys chat back and forth all day, and they can trade back and forth. So it's a great way to get exposure, talk to other traders, and kind of have a nice casual trading strategy that's not really active, but allows you to take a few trades a month and play these tides, getting into these sectors. When they start to get tired, we move out, find a fresh sector, and that's one of our core strategies is the band strategy, the best asset now, and we just move from sector to sector with the strongest relative strength sector at any given time.
Great. Thank you so much, Chris.
Hey, always a pleasure. Thanks.